And I was saying that, actually I need to say from the real beginning. Okay guys, let's take a look at the markets. Before we start, I need to stress the trade financial markets unfortunately is high risk. I will share with you my view on the market, and it's made with an educational purpose. It's not intended to be buy or sell recommendations. Okay, so the euro, as you know, has been boring and trading sideways for a very long time, but I'm super excited. And yesterday I did my first trade in the euro since the market declined here. And that's how I've been ignoring that market. I sold it here and booked some profits here. And since then I haven't touched this thing because I know a market when it's range bound and I know a trend when it's beginning. So as long as we trade above yesterday's high, which is 116.68, I'm going to treat this as a bullish trend. We have established ourselves above this high here, and more importantly, we did have a very nice close above this level. We could easily correct, without a doubt, but because we closed up here, the reference point is going to be this level here. So I think we can go down, probably then 18.52, and then probably up to 120. I'm personally probably going to look to book profits around 119.50 if we go that far. We never know from the outset if we're going to go that far. In fact, when we declined here, I thought we were going to go down to 111. So what I did is I just track with stop losses. I just moved my stop losses from here, I think it was, down to here, and then somewhere down here, and then I got out somewhere here. So it's the same situation here. If you look at this, where are people going to buy the next time? Because I do assume that you're already long. So if one is already long on the breakout, and then what we're going to do here is just to wait and try to reduce the stop loss. And I think we can probably reduce it to 117 at one point. People that are not long, they're probably not buying here right now, even though, you know, if you're targeting 120, it's still a good deal. But ideally, we have that little pullback. And I just took a fib from the low to the high. And you can see here that this is the first fib, and then you have the 50% correction, which is really what this low is, and then you have the upper end here of this little level here at 17.12. I would be very surprised if we trade below that level. So I think down here people are going to try to build a position, and it will be an initial risk of about 85 pip. If we hit the high, you make 98. If we go up to 120, you make 250. So still very favorable, and this is a good market. And here, it's probably going to take a week or two to even reach. Hopefully, we can reach 119 very quickly, but the last part could take a long time. So I'm just gonna, in my case here, I'm just gonna manage my stops really, and then we'll see what happens. Here's the pound. And the pound is under pressure. Why? Because the head, not the head, but Donald Tusk, which is a prominent and important figure of the EU. He always speaks about the current situation, has done so for many years. He said that the plan by Theresa May is not going to work because it will dilute the value of the single market. The single market means that we can buy and sell, import, export goods and services without any friction or any issues at all. And they don't want to give that up because the UK is looking for goods to still be part of this section, because it's important. Because the way the world is set up right now, you have a factory in the UK that gets parts from Germany, parts from France, and vice versa, and it's important that they don't hold large. It's important here that that things happen frictionless, but they don't want to give up on that, so they have about 4 weeks to sort things out. Sorry about that. Here, I think technically we're dealing with an uptrend, okay? And obviously we have good retail sales, good consumer price index, everything is pushing to the upside. And I think as traders that are short, they're being pushed out of the markets. And as well, I think as well the market makers and people that make markets, the banks. Because imagine right now the price is at 132.20. I mean, it's not so much imagining, we are here right now, but imagine that right now we'll get a new headline. Brexit deal been implemented, what are the market makers going to do? Because the market makers, they hold positions as well. Well, they're not going to sell you the pound dollar at 132.22. They're probably going to sell it to you at 133.22, maybe even 135. It sort of depends on the details. So I think it's that sort of it's that sort of trading and that is pushing price to the upside. It's not necessarily fresh money going long at these levels, because this is rallied, and it's rallied quite steeply. So this could potentially decline and collapse like a house of cards if we start to trade below 130.96. Now, if you know about scalping, you know you have a system and you want to work with it, and you know that it works and makes money for you, then I suspect that, you know, implementing that strategy around here, looking for a bounce, that's totally fine. But if you don't have a scalping strategy, you don't really know how to manage the short term, then I think the euro dollar is better, because the euro dollar is something we could buy and hold, and that's what I like now anyway. I don't scalp at all any longer. But yeah, bullish above here. I think we can go down and then probably upwards. In the case of gold, the market is also very interesting, because it's not like the pound dollar that's been rallying higher and higher and higher without any break. Here we have a nice little sideways trading for almost a whole month. Actually, I think it is a month now. No, next week is going to be a whole month. So this is a neutral. It's not overbought, it's not oversold in the short term. So if we take out the high, this could rally to the upside. It's a bit tricky though, because why do you want to buy gold where you have to pay financing costs when you can buy some shares? You might even get some dividends, and there's something more tangible. So I don't think necessarily people are pushing and going heavy into gold. Rather, I think they're focusing on other things like the dollar yen, stock markets, and things like that. I am bullish, and I think this, again, we just need to see. I think if we take out the high, we can probably do something very similar like we do with the euro. If we close on the other side, as long as we don't trade below the low, or at least maybe at 1207, I think it could make sense to be bullish here. The alternative, if something happens, and believe me, something will happen at one point, I think we can go down. And then finally, let's look at crude. This is crude oil. It's rallying today. We haven't really properly taken out the September 4th high. When we do, and if we do, I think we could turn bullish. I think maybe just being bullish above yesterday's low could be it. That would provide a risk of $1.50. If we hit the high, that's a 3% return, so that's 2 times the risk. And if we hit the different targets, then it's 6.5. So $6.50 divided by 1.5, that's 4.3 times the risk, which is a good move. Very good trade. Here's the S&P 500. Wow, looking really, really nice. So this is an ascending pattern. If you guys been following me over the last 2-3 months, you know how important and how much money we made on the back of this pattern. I was joking this morning, saying that, you know, if I was ever to get a tattoo, it would be a tattoo of this pattern. Not that I have any issues remembering it, but this is so beautiful. This is the horizontal line. Push above it, trigger that level or that breakout, and the difference between the low and this level is this target, and we're heading straight towards that level. So I hope you're well in position, and I suspect we could potentially, if it goes down, because this will go down eventually, maybe we'll go down something like 29 at 25 or something like that. But I suspect people will look to buy here on any dips, and as long as it's above 29.08, that should be bullish. To give you an idea, in the Russell 2000, we had a similar pattern here. This is the same pattern, more or less, here. And I traded this one as well. This is the daily. Looks better like that. This is the same pattern. We can measure it from here, or can measure from here. Usually it's better just to take the midpoint like that. So reached that target already. Here in the Russell 2000, you have the same pattern right now, that breakout. So that suggests that we can head all the way up. If the Russell 2006 starts 1727, then this is upwards. And this brings me to, again, I know I'm keep nagging on it because, but I'm just doing it because you just, if anybody's here and haven't heard this before, it's important. The euro has been boring. It's all good now, and I'm trading that. But what has been really good this year has been stock markets on the upside. What's been also really good, and brings us to our next topic, is the is cryptos. They have been good to sell. Here's Bitcoin right now, and Bitcoin just took out this high here, and this is a high from the 15th of September, and this is the daily chart. The market is now moving higher, and as I said in the past, I think it can go up a bit more, maybe 7,000. And the real challenge for Bitcoin, and a big triumph, is going to be if it takes out 74.29, because that would take out this big pattern, and this pattern is weighing heavy on Bitcoin, because if we take out this level here, we're going to tumble with maybe 40%. So this is a ascending, descending triangle, and we're moving to the upside right now. We'll see what happens. We are starting to see a bit of moves to the upside. I mean, this is Ethereum. Technically, the trend of Ethereum is still bearish, below 303. This is Ripple, which, wow, look at that. Took out that high. So this market is now short-term bullish, without a doubt. The market took out this, which was a trend-defining level, and has since then soared with a nice cool 30%. If one would have sold here, you would have lost 15, or you would have lost 6 cents. But if you flipped and turned bullish at the same time, you would have made 10. This is now bullish. Bitcoin Cash is moving upwards. I think if we just add one and one together, we'll figure out that selling right now, right here, is probably not a good idea. Probably pushing this up a bit. And I'm not a big advocate of selling, but technically, just looking at what's going on across the other markets, this is probably going to push higher. Now, if we take out this high, we'll probably see a reversal, and that could be something. Here's EOS, which is mildly bullish. This is the key level you're watching. Same time, if we take out this low, we'll probably head lower. I suggest you look across all the top 10 coins to get a rough idea of, of the overall trend. What I remember from the past, and just by looking quickly here, Litecoin is technically still in a downtrend. EOS, it looks to end the downtrend, but it hasn't really happened yet. Bitcoin Cash is definitely bearish. Ripple is bullish. Ethereum is bearish. And Bitcoin, again, I wouldn't really touch it just yet. It could be the beginning of a move, but we've seen this many times before. So I would personally wait for more of a confirmation that we're going to end this downtrend. And when we do end the downtrend, it can become really interesting. But right now, we're not just there. Okay, let's see if you have any quick questions. So Mahmoud Ali asks, when can we use the trend line and when we use a channel? So good question. Trend channels are very popular, as you know, and you can use them, but I don't use them. The problem with the trend channel is that the trend, so a line, I'm going to bring out Paint. I don't use trend lines. So the problem this is the problem with a trend line or a channel. This is a channel. For anybody that doesn't know, a channel is something like this, okay? And then you connect it with a supporting trend line like that. So this is a channel. And this is time, so T for time, P for price. And the general idea here with channels is that you would buy here and book profits maybe up here. Some people are even gonna try to sell at the upper end, but remember this, it's never good to, if the price is going up, never look to sell. Just never do that. I learned that in the first year of my trading, and since then I have not done it. And I think it's a big reason why I'm profitable. I have tried to sell at the highs, but that's really, really hard. Now, you will find these patterns sometimes if you look hard enough. Now, the biggest problem with the trend line is the following. So the trend will have different speeds. So imagine not much is happening in the market. So the market is slowly going upwards, okay? And then you try to do your trend line, and you do your trend line like this. And then you say, well, next time price goes down, I'm gonna buy. But suddenly you have some news. Donald Trump said something. Wow, it starts to rally higher. So your trend line is down here. Price will not come back to your price or to your trend line anytime soon. So what do people do? They do like that. Okay, and then they say, okay, I'm gonna buy when the price goes down to the trend line. But then the price goes down to the trend line, cuts through the trend line, so they get stopped out, and then it does like this, boom, like that. So the trend line is a bit backwards looking, unfortunately. It's too backwards looking because the nature of a market is very fluid. It will go slowly and then very aggressively upwards, and then it just trades sideways. So the trend line itself doesn't really work that well. So, and I think as well, everybody sells you the trend line. If you look online, everybody talks about it because this is a simple concept. And everybody that's in the business, they know that because 80% of people lose money, 20% of people already know a bit of trading. The other 80% are new traders. So almost all the education online is educated to educate new people. And the trend line is such a simple concept that you can understand very, very, very easily. And that's why people go for the easy route. If you look back at books of technical analysis from the 80s, they will talk about trend lines as well. But at its most basic, the definition of an uptrend is the following. And as long as you create higher lows and higher highs, we're in an uptrend. So what I do is I use Fibonacci if I want to buy a dip. So as long as you trade above this level, I'm okay to buy. But if the market tumbles below it, we're not creating higher lows, right? So I can't be long anymore. So what I do is that I would take a loss here. Now I use Fibonacci to figure out, where can I buy? Because technically, if this is a genuine uptrend, we should not trade below it. So stop goes here. So I know that from the beginning. That's gonna be my stop loss. And then the price, I try to buy maybe a 50% pullback or a little bit less sometimes. And then I push like that. And because I'm with the trend, when the market goes higher, I'm gonna make more money. So I'm gonna, mathematically, maybe I'll make 100 pip, but I will only risk 50. Yeah? So this is trend following. And the benefit of this system is that the market can be very boring like that. And I'm gonna say, let's be bullish. And then when it goes aggressive, I'm gonna say, yeah, let's be bullish. But what we're gonna do is we're gonna track it with a stop loss like that. So we are prepared for those moves to the upside. To give you a good idea, the pound dollar is such a market. So Well, so for example, a few days ago, I mean, if people were drawing trend lines, they would do like that, okay? And the idea would be to buy here, I think it was, which I told you about. I told you to buy, I told you that market would bounce from here. Why? Because this high was taken out. So we had a new higher high and we already had a higher low. So I turned bullish here. I saw that pullback and I said, it's time to buy. And then the market moved up to the profit target level. And now what I'm doing is I'm tracking this. If I'm using a trend line, I'm not going to be buying because I'm too far away. But if I'm just tracking in the lows, like almost every day, I could have given you a setup like this. And we can track that to the upside. So I would recommend do not use trend lines. You can use a trend line part of a pattern, but in the traditional way, if I do a trend line like this, I would have sold here. Selling against the trend is never good. That's how you lose money. And so that would not have worked out. But at the same time, if you're looking for that dip, it will maybe happen at one point, but most likely it will be too late. This is where you made your money. So we can track this. Now, if the market trades sideways here for a long time, I'm still going to be bullish. If you look at gold, the market turned sideways, and we can use this as a level. Another thing as well with trend lines is that when the trend moves quickly, here you broke that trend line, so you suddenly think you're bearish. But what happened is that the trend is still upwards. It's just that it's increasing at a slower pace, right? So the trend line goes from here, and then the trend line goes like this. Now, let's think logically. If this market goes down to the low here and it breaks below the trend line again, are we gonna be in a downtrend? No. We still gonna be above this level. So the basic definition says as long as we're above this level, we should be bullish. So the problem with trend lines, which is why channels don't usually work, is that the trend line measures two things. It measures the trend, which measures correctly, but it also measures the speed of the trend. So just because we break below here, the speed is less aggressive, but you're still in an uptrend. And it would be the same here, but you would have received several false signals. You would have bought here and lost some money. And in worst case, if it goes down here, you buy again here and you lose some money. So that's why this is something I haven't been using for a long time. So quick question, where can I learn to analyze the markets and trends like you? There is a book you can read. See if I can find it. This book here by John Murphy. Technical analysis. Technical, I think it's this one, yes. Yes, this is one of the books I read. As well, we do offer more services and things like that. You send me a message via the Twitter, so up here you see my Twitter channel via AlexFX, or you can just send me an email via asambrano@tradecaptain.com. Within Trade Captain, in the premium section, we have a book that we're gonna publish very soon as well. That's gonna help. Because you got a question about Ripple. So Ripple obviously turned bullish. So So Ripple is now at these highs here, and how much did the market move up in one go? From the lowest up with 77%. I can tell you this is not a good level to buy. I can tell you that much. I think if it goes down, I think traders will be quite happy to buy here somewhere and then maybe look for that move. So I think this could be a good little spot to book profits. But if you look across the board, it looks to me that you see slightly higher Bitcoin Cash prices, maybe slightly Ripple as well, and higher Ethereum. So maybe this is gonna add a bit more. I'm not sure though. My gut feeling tells me that it's a move like this. It's something like this. And I think eventually it will roll over. Only when Bitcoin takes out its high and I see more stabilization across the board would I look to sort of be holding this for a strong bounce. So I think it needs to be careful. I think again we can go a little bit higher. You can potentially work with some of these levels here. One way of looking at it sometimes is that, is this a good level to buy? If it's not a good level to buy, then it's sometimes and usually a good level to book profits, okay? Obviously, things can change. Here, there's two ways of dealing with this. You can either just book profit now, or you could wait and just track the uptrend from the downside. Okay, so you have that book, guys. You can read that book. And I think as well what you can do, which is sort of key, even though you're not like an analyst like me and you're not like a trader, the best thing to do is you learn how to follow trends and then you try to track trends. And I recommend the 4 hour, usually the 4 hours good, or the daily chart. And what you do is that you do analysis, daily analysis on maybe all the big pairs, plus gold, crude oil. So if you do daily analysis, you do that over 3 months, then at the end you will understand the rhythm of the market. And when you do it faster and faster, or when you do it more frequently, it goes faster. In my case, it's very, very easy, and it just takes me seconds to look at a chart. Okay guys, thanks so much for watching, and I'll see you guys not tomorrow, but on Monday. Have a good weekend, and please don't forget to like the video, and as well don't forget to retweet and follow me on Twitter. And if you have any questions, just send me a direct message or send me an email at asambrano@tradecaptain.com. We do have services. So for example, people that deposit more than $50,000 into the trading account, we work together, me and that person, for a few sessions. So we do things like that. And as well with Trade Captain, we do have a premium section where we have trade signals, not from me, but from different services that we have. And we have a book, and we have a new book coming out that I have been working on. And that book is probably going to be out in a week or two. We're just finalizing it. If you have any questions, want to talk more, send me a message. Have a good day, guys, and I'll speak to you guys soon. Thank you.